as many markets and institutions slow down during this period. In commodities, gold rallied after the inflation report, rising over 1%. It is difficult for us to see a downward movement, and this kind of downward movement with a lot of strength. Very difficult. This week we are diving into a quieter market calendar, but don't let the lack of fundamentals fool you. There's still plenty to watch. From the Canadian GDP data to the US unemployment claims. These reports might hold the key to market movements as we head into the festive season. Stay tuned to find out how these events could impact your trades and what to prepare for this unique time of the year. As you know, we always start with the economic calendar. Don't forget that the hours that you are going to see are based on GMT -5. On Monday, December 23rd at 8:30 a.m., the Canadian GDP month-over-month will be released. This data shows how much the Canadian economy grew or shrank compared to the previous month. A higher number generally indicates economic strength, which can strengthen the Canadian dollar. On Thursday, December 26th at 8:30 a.m., the U.S. unemployment claims report will come out. This measures the number of people filing for unemployment benefits for the first time. A lower number suggests a healthier job market, which is often positive for the U.S. dollar. It's worth noting that there are fewer economic fundamentals for this week, and this is due to the holiday season, as many markets and institutions slow down during this period. And now let's head to the fundamentals, because this week the markets have been buzzing with several market developments. And here is a breakdown of what's happening. Wall Street stocks surged on Friday as inflation data came in cooler than expected, which gave investors some relief from concerns about rising prices. The Federal Reserve's preferred inflation metric, the PCE price index, showed that inflation is slowly aligning with the Fed's 2% target. This was good news for the markets, with all major indexes, the Dow Jones, S&P 500 and Nasdaq, posting solid gains to close the week. At the same time, Treasury yields eased, with the 10-year yield pulling back to 4.51%, reflecting hopes that the Fed may cut interest rates further in the coming year. This drop in yields also softened the dollar, which fell slightly against other currencies like the euro and yen, but still managed to post a third consecutive week of gains. On the global stage, European stocks struggled due to uncertainty caused by tariff threats from President-elect Donald Trump, leading to the Stocks 600 and FTSE Euro First 300 indexes falling for the week. Meanwhile, emerging markets and Asia-Pacific shares also saw declines, signaling broader market caution. In commodities, gold rallied after the inflation report, rising over 1%, but it's still on a track for a weekly loss. Oil prices dived slightly amid concerns about weaker demand in 2025, especially in China. Brent crude is hovering around 72.78 per barrel. In the crypto space, Bitcoin recovered slightly after the inflation data, gaining 0.08%, while Ethereum declined 0.75%. Despite the turbulence, Bitcoin remains resilient, keeping traders attentive. Overall, the markets are reacting to a mix of factors, from inflation reports and central bank actions to geopolitical tensions and global demand concerns. Now is a crucial time to stay informed and adapt to these rapid changes. And now let's dive deeper into what these movements mean for your trading strategy. We'll start with the US dollar index, as we always do. And first of all, we need to mention that we have reached 2 of the 3 targets that I have mentioned to you last week. The first of them was 107.566 and the next one was 108.071. After the price did an upward movement, you can see, and after reaching both of these targets with a lot of strength, we can see that the price is doing a pullback. So I will erase all these targets that we have last week, and I want to show you where is the fair value gap of this movement. As you can see, the 0.5 over the 50% of this fair value gap is located at 107.570, which is one of the most important parts of this fair value gap. Although the price didn't reach that specific point, we are seeing now a reaction from this fair value gap, and it is possible for the price to do a new upward movement. Taking into consideration that we are not having a lot of fundamentals or a lot of movements because the professionals may not be trading as you would like to, you need to consider bullish targets. My first bullish target will be this one located at 108.541, and the next one, which we have located weeks before, is the 108.986. If we reach both of these targets, maybe we can see a new pullback from the price of the US dollar index. And there is an important thing to consider if you're trading this upcoming week. If the US dollar index keeps its bullish momentum, it is highly possible for all the assets like the euro versus the dollar will start to fall and will start to keep this downward structure, and we will see that to confirm with the euro dollar. So take into considerations these two prices, these two targets for the US dollar index. If you are bearish with the price, I would maintain this target at 107.570. I can also consider the end of this fair value gap located at 107.162, and maybe we can add also this bearish target at 106.698. We also have several targets, but let's be honest, if we don't have enough fundamentals, if we don't have news, if we are not having professionals that may be moving the US dollar index, it is difficult for us to see a downward movement, and this kind of downward movement with a lot of strength. Very difficult. Next asset, the SP 500. I have told you the last week that any kind of upward movement that you are going to take a trade with that, trying to get a buy with the SP 500 was very risky. So I mentioned to you that before buying the SP 500 or before doing any kind of contract to buy a contract with the SP 500, you need to consider first this pullback that we are seeing right now. So we have reached 3 of the targets I left you, and we have reached the last one that was located at 5,905. After this, look at this important point of the price. The first one was reached at 5,853, and we were really close to reach the last one, which was the most important one located at this vacuum block at 5,824. Whatever, we didn't reach that point, but now we are having a new upward movement, and it is highly possible to try to continue with this movement. Don't forget also, we will talk about this now that we are heading into Bitcoin, but don't forget that Powell have talked this last Wednesday, and he mentioned some serious things related to Bitcoin that we are going to address in the next asset, but it has also impacted the SP 500. So after this movement, after this speech from Jerome Powell, we had this big, strong bearish movement that made the SP 500 reach one of the most important bearish targets that we have. Now, you need to know that the SP 500 has enough liquidity, so maybe, in my opinion, we should start finding with our strategy entry points to buy the SP 500. But that will only come if you are trying to find those kind of movements with your strategy. If you don't have a strategy, I would suggest you to not trade, because in any moment the SP 500 can fall again and will make you lose in the markets. As a bullish target, I will leave you with this one, which is located at the 50% of this fair value gap, and it's located at $5,988. And finally, the last all-time high, which is located at $6,099. Also, we can erase this target, and you can only keep the next bearish target located at $5,824. And last but not least, another bearish target here at $5,696. Now moving to the euro dollar, we are seeing right now that the euro dollar is trying to recover some of the fall we had in the last week. But as you can see, the euro dollar is really weak, so it will be difficult for this asset to recover enough to try to think about a market structure. That means a change from a downward trend to an upward trend. That will be really difficult, so take that into consideration. To think about a market structure shift, first you need to take into consideration a breakout of this point of the price, 1.05345. Only if we have a breakout of this resistance, maybe we can think about a market structure shift to maintain an upward trend. If that is not happening, it is highly possible to keep this downward trend, this downward movement, and it's highly possible to reach and break the 1.03330. And these are bad news for the people who is bullish with the euro dollar. Targets for this week, I will keep this as a bearish target. And also, if you are trying to consider the market structure shift, don't forget this other target with the euro dollar. Maybe a good thing to take into consideration with the euro dollar is that it can keep its downward structure. So be careful at the moment you start trading this asset. Finally, we are seeing Bitcoin. We have done a lot of movements this last week. First, we reached the all-time high located at $108,388. After that, we started a downward movement that we have not stopped until now. So now maybe Bitcoin has enough liquidity because, as you can see, it has reached all of the bearish targets we had. All of the bearish target we have established, even the last one. If you are assessing Bitcoin in other exchanges, you will see that the price has reached this point that we have established with you the last week. So for now, we can say that Bitcoin has enough liquidity and it is highly possible for the price to keep an upward movement. The targets for this week for Bitcoin maybe will be located with the fair value gap that I can locate here. It is at $98,865. Next one is located here, point of liquidity, $102,796. And finally, the last objective before reaching this important resistance is to reach the last all-time high at $108,388. Keep in mind that Bitcoin is maintaining its rally movement, so it is difficult for the price to have a crash. Take that into account because I am hearing from several traders that they are waiting for Bitcoin to fall a lot, and that maybe that won't happen. Thanks for watching, and if you found this video helpful, don't forget to give us a like and subscribe to the channel for more market insights every week. Turn on the notifications so you will never miss an update. And if you want to trade all the assets we have saw in the video, I will leave you a link in the description to register at xChief.com. Wishing you all Merry Christmas from the xChief team. May your holidays be filled with joy, peace, and success. And see you in the next video.